Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar remains steady into its sixth consecutive day, and if you can see here, the market is still slowly attempting to break higher, but we still need to see a break of the level of 65.35, which would ignite the move on towards 65.65, and with the 60-day moving average seen around 66.30. Any pullback, I still view the support area seen as a key point at 64.55.60, as market bulls are expected to return and defend this region. The euro also a little bit mixed now after a whipsaw price action is coming into a slight pullback. And ahead of that, with all eyes now turning to the US Consumer Price Index report for January. Along with that, we also get the PPI on Friday, and also we get Thursday's retail sales. The latest data suggests that the US economy is still robust and leading into a reduction in expectations of the Fed rate cut at its next meeting. However, although there is initial expectations that the US Federal Reserve would start cutting interest rates in March, but these developments have been slowly pushed back. Viewing the economic data, a softer CPI or Consumer Price Index and a weaker retail sales may give the Fed more confidence that inflation will eventually return to its 2% target. Although the euro is a little bit mixed, the dollar index, which measures the greenback strength against a basket of 6 major currencies, still remains around 104.1020, and the lackluster price action still gives and possibly a potential downturn. Therefore, we should see a bounce anywhere towards the region of 107.1525 and still hold the objective to 108.4550, and a break there could give further scope towards 109 to 109.7090. Dollar yen, well, the market's still attempting to try and break higher since clearing the key point around 148.80. Although I am bearish, a move above 149.60 would see further stops triggered and leave me in a short-term neutral position. That said though, this appears to be like a rising wedge forming, and therefore the market should potentially turn down, as this is a bearish pattern, and look towards the 148.80 support. We need to see a break there to ignite further weakness and on towards 148.35 to 147.70. Sterling, well, the market still somewhat bullish since this dragonfly doji, even though we are getting a slight profit taking ahead of the US data. I still feel towards the region of 125.35.70, but then a bounce should take the market on to 127.15.25. And a break there would give further scope and broader the horizon to 128 to 129. Now coming into the fourth consecutive day of trading, gold is still struggling to maintain any bullish bias and now weighing on the support level of 2016-18. A break there would give further scope towards the next target, which is seen roughly around 1998 to 2003. Further assessment will be needed at this point. With all that said, a bounce off 2016 would put the bulls in a favourable position and see a rise on towards 26.34 and a cap somewhere around 2042.48. Wrapping up with oil, the market still maintains its bullish bias since reinstating the topside target of 81 to 83 from this inverse head and shoulders, and closing above that 74 now puts the target towards 78.5. Leading beyond there gives us 81 to 83 as a measured objective. Any pullback, well, we can see the support line here coming in around 74.40.60. Well, that's a wrap. Thank you for joining me, and as always, look out for the intro report. I hope you enjoy the great start of the day.